You're welcome to my channel. We are still on topic 3, elements of taxation, which is income tax. And under income tax, we are going to look at the basic considerations in determining a person's tax obligation. A person's tax obligation is determined or detected by a number of considerations basing on the provisions of the Income Tax Act. But we mainly have 3 basic considerations that are used in determining a person's tax obligation. First is the nature of the person, then the residence of the person, and the type or source of income received by the taxable person. Those are the 3 main considerations that we use when determining a person's tax obligation. And in our previous video, we said a taxable person refers to a person as defined under the Income Tax Act. And a person can be an individual, a partnership, a trustee, a company, a retirement fund, government, political subdivision of government, and lastly, a person can be a listed institution. But some of the persons identified above, for example, an individual, a partnership, a trustee, company, retirement, are further categorized into residents and non-residents persons. And the relevance of categorizing them is to determine whether a person is a taxpayer, it's to determine whether the taxpayer is to be taxed on his worldwide income or only on the income that is derived in Uganda. Because for a resident person, they charge the tax on his or her worldwide income. But for a non-resident person, the tax charged is only on the income that is derived from Uganda. So those categories of people are further categorized into residents and non-residents persons to determine whether a taxpayer is to be taxed on his worldwide income or the income derived from Uganda only. Now let's look at the qualifications of being a resident person. We shall first look at the qualifications of being a resident individual. An individual is a resident individual for a year of income if that individual first has a permanent home in Uganda, or if that individual is present in Uganda for a period amounting to 180 days or more in any 12 months that commences or ends during the year of income, or that person has been in Uganda for more than 122 days in the 2 preceding years of income. And lastly, if that individual is an employee or official of the government of Uganda posted abroad during the year of income. So those are the 3 qualifications of a resident individual: has a permanent home in Uganda, is present in Uganda, and is an employee or official of the government of Uganda posted abroad during the year of income. Then the qualifications of a company being a resident company. First is that a company is a resident company for a year if it is incorporated or formed under the laws of Uganda. Secondly, if it has management and control exercised in Uganda at any time during the year, or if it undertakes majority of its operations in Uganda during the year of income. Those are the 3 characteristics of a resident person. A resident company. If it's incorporated or formed under the laws of Uganda, has its management and control exercised in Uganda, and if it undertakes majority of its operations in Uganda during the year of income. Let's now look at the characteristics of a resident trust. A trustee is a resident trust for a year of income if the trustee was established in Uganda, if at any time during the year of income a trustee of the trust was a resident person. Then lastly, if the trust has its management and control exercised in Uganda at any time during the year of income. Those are the 3 characteristics that qualifies a trust to be a resident trust. If it was established in Uganda, if a trustee was a resident person, then if it has its management and control exercised in Uganda during the year of income. Then a resident partnership. A partnership is a resident partnership for a year of income if at any time during that year a partner in the partnership was a resident person. It qualifies the partnership to be a resident partnership. Let's look at a resident retirement fund. A retirement fund is a resident retirement fund for a year of income if it was organized under the laws of Uganda. Then secondly, if it's operated for the principal purpose of providing retirement benefits to a resident individual. Then if it has its management and control exercised in Uganda at any time during the year of income. Yes, so those are the three characteristics of a resident retirement fund. If it's organized under the laws of Uganda, if the person who is going to benefit from it is a resident individual, then if it has its management and control exercised in Uganda at any time during the year of income. Lastly, let's look at a non-resident person. A person is a non-resident person for year of income if that person is not a resident person for that year. Yeah, so that was all about the basic considerations in determining the tax obligations of a taxpayer. Thanks for watching. Don't forget to subscribe, like, comment, share with your friends, and watch my next video. We shall be looking at the types of income received by a taxable person.